Hello and welcome to Market Moments with George. This is George Kittel, investment strategist with Four Oaks Financial.
Listen to this. The S&P 500 is dancing on the edge of the 5,000 level for the very first time, a significant milestone marking a new era of growth and prosperity for many investors. However, as we celebrate this financial feat, other sectors of the economy are experiencing a less celebratory atmosphere. Take insurance rates, for example. A surge in social inflation is causing them to skyrocket, with no end in sight for rising premiums. Social inflation, a term used to describe the rising costs of insurance claims, is becoming a hot-button issue. It's not just affecting corporate insurance either. It's making its presence felt across the board. But what's causing this social inflation? It's a multitude of factors. A more litigious society, an increase in the frequency and severity of natural disasters, and, of course, the ever-present inflationary pressures that are affecting all sectors of the economy. It's a perfect storm that's causing insurance rates to climb higher and higher. Now let's shift gears and talk about the housing market. Housing demand is stalling out as mortgage rates march higher. This comes as no surprise. As the cost of borrowing increases, fewer people are able to afford to buy homes, and those who can are finding it harder to get a mortgage. This slowdown in housing demand is a direct consequence of the rising interest rates that are affecting all sectors of the economy. And then there's car insurance. Rates in 2024 have jumped a staggering 26% across the United States. This isn't just a minor inconvenience for drivers, it's a major financial burden. And it's not just because of the rising cost of repairs and medical care. It's also a result of an increase in risky driving behaviors, such as distracted driving and speeding. So, what does all of this mean for the future? Well, if these trends continue, we could see a significant shift in the economic landscape. The rising S&P 500 might be a boon for investors, but for the average American, the increasing cost of living could become a serious burden. Moreover, the rising insurance rates could lead to a decrease in the number of people who are insured, which could have serious implications for the healthcare system. And the stalling housing demand could lead to a slowdown in the construction industry, which could have a ripple effect on the rest of the economy. As for car insurance, if rates continue to rise at this pace, it could become prohibitively expensive for many people to own a car. This could lead to a decrease in car ownership, which could have wide-ranging implications for the auto industry and the economy as a whole. In conclusion, while the S&P 500's rise to nearly 5,000 is certainly cause for celebration, it's important to keep an eye on the other economic indicators. After all, the economy is a complex, interconnected system, and what happens in one sector can have a profound effect on the others. So, while we toast to the success of the stock market, let's also keep a watchful eye on the challenges that lie ahead.
Take control of your financial future. Contact me today.